Good Monday morning. It's July 19th. I'm Kenny Polcari, host of the party, and this is your morning market commentary. Everything you need to know to get your day started. And what a day it's going to be. And you need to guess where I am, but you can figure it out if you're following me on Twitter, but we'll keep that for later. So what are the things we need to worry about, right? Markets did get a bit anxious last week, and they remain a bit anxious this morning. Futures are lower, but we'll get to that in a minute. Earnings are in full swing. And this week is going to give us a clue across a range of industries, so you need to be paying attention to what that says across a range of industries. OPEC over the weekend did come to an agreement. They're adding 400,000 new barrels per day, sending oil lower. Traders are not really happy with that decision. Everyone expected more than that. But I think this is going to be short-term. Demand is still strong, so nothing to worry about. Bitcoin is down another 1%, teasing that $30,000 level, which is very, very important on the charts, and Ethereum is trading at 1,800. What are we having for dinner tonight? We're going to have the broccoli fava bean risotto. It's a great summer dish. We'll get to that at the end. So stocks ended Friday and the week lower, right? As worries over inflation continue to cause the unease. Friday's consumer sentiment index fell to 80.8 versus the expectation of 86.5 and last month's read of 85.5, suggesting that Americans may not be feeling so good about the near-term future. This, all while the retail sales advanced strongly, rising 0.6% versus the expectation of a decline of 0.3%. Ex autos and gas, we were up 1.1%, which also suggests that consumers are rushing out to buy items in advance of what is expected to be even higher prices in the months ahead. So sales are being pulled forward while sentiment declines. So that's kind of a yin-yang effect, right? Comments by a number of the Fed officials, including Jay Powell, being cited as the reasons for the building angst. Look, in his testimony last week, Powell did admit that while inflation feels a bit uncomfortable and feels like it's a bit stickier than any one of us would like, it's still just transitory. Now, that's interesting here because it feels a bit like Jay's pivoting, right? Ever so slightly. Recall, he was towing that line where he was telling us there wasn't any inflation at all, nothing to worry about. But in these most recent comments, he acknowledges that there is some, and it is uncomfortable, but there's still nothing to worry about. To which I'd say, of course he'd say that. What did you expect him to say? That he was going to did you expect that he was going to suddenly say they'd had it all wrong? My guess is that they need to find another way to begin to change a narrative without creating panic. And that, my friends, is going to be the challenge, especially if the data continues to tell a different story than the one he is telling. So we've got to keep our eyes on that over the weeks ahead as this macro data comes in. And then we have this Delta variant, right? That's once again wreaking havoc and causing concerns around the world. Airliners, cruise operators, all and hotels, all taking it on the chin last week, making this group the worst performer for the day. Jets, which is the global ETF that tracks airlines and airline manufacturers and airports and terminal services, fell by 2.7% on Friday, taking it below its long-day, 200-day moving average, suggesting further weakness ahead, while Cruise, CRUZ, is a hotel, air, and cruise line ETF, and that fell by 2.5% and is now down 11% since its debut in June, suggesting difficulties ahead, right? Or at least that's what the market's telling us. By the end of the day, though, the Dow fell 300 points, or 0.9%. The S&P was off by 33. The Nasdaq gave back 116 points, or 0.8%. The Russell fell by 27 points, or 1.25%, and the transport took it on the hardest, falling 204 points, or 1.4%. The 10-year Treasury surged in prices as investors chose to move into the safety trade, sending yields plunging, ending the day at 1.25%. The VIX, which is the fear index, rose by 14% to end the day at 1863, while oil fell 30 cents to 71.45 ahead of the OPEC announcement. S&P's found strength in utilities, up 1%, healthcare up 0.3%, consumer staples up 0.2%, real estate up 0.1%. And that makes sense, right? They're all safety trades. Other sectors got slammed. Energy leading the way, down 2.7%. Basic materials down 1.5%. Financials down 1.4%. Technology down 1%. Industrials down 0.8%. The value and growth trade both got hit, with value falling 0.9% and growth falling 0.7%. ETFs that make you short the market, think hedging your portfolio, rose substantially. The SH, which is the ProShares S&P 500 short ETF, gained 0.8%, while the VIXY, VIXY, is the ProShares VIX short-term ETF, rose by 3.8%. Over the weekend, we learned that OPEC Plus has come to a deal and that the Gulf allies have agreed to inject more oil into the recovering global economy. This after the Saudis agreed to meet the United Arab Emirates kind of right in the middle of their demand for higher output limits, right? The UAE wanted 3.8 million barrels per day, up from 3.1. What they got was 3.5, smack in the middle. And that was enough to get them to sign on the dotted line. And all this means in the end is that OPEC has agreed to bring an additional 400,000 barrels per day to the market, which is below what some expected to be 500,000 barrels. Other analysts actually predicted as many as 1 million more barrels per day. In the end, it was a disappointment for consumers, while it's a boom for the Arab producers, because it's enough to tease, but not enough to cause any real price disruption, right, in the longer term. This morning, oil is down $1.80 at $70.02 per barrel as the global oil traders kind of unwind some of those positions that they made on an even bigger supply bet. All while the media continues to play up the Delta variant, causing renewed angst. And so that is causing some short-term difficulty. I think it's overdone. Over the weekend, we also learned that UK Prime Minister Boris Johnson is now once again confining himself to house arrest after being re-exposed to the virus. Recall that he had been hospitalized last year during its initial outbreak, right? This as the UK has now officially ended over the weekend its lockdown, right? And the Delta variant cases have surged, both there and at home. Non-vaccinated people appear to be the ones getting hit the hardest, so expect the CDC to change their narrative once again as they start talking about masks, no masks, should we wear them, we shouldn't wear them, what should we do? This morning, U.S. futures are down again. Global markets are all under pressure. Japan was off 1.25%, Hong Kong off 1.8%, Australia down by 0.8%, while China ended the day up 0.3%, if you really believe it. European markets are all getting hit with the market centers off nearly 2%. Dow futures are off by 500 points now. S&P's off by 30. The Nasdaq's off by 50, and the Russell is lower by 35 points. The story once again is all about inflation fears, but my sense it's also about exhaustion. The markets have had this tremendous move higher, and with little to no pullback. And after the first week of earnings, which did provide stellar results, it didn't provide any big upside moves, right? In fact, to the contrary, what we saw in the financials was a bit of a pullback in what was viewed as a relief trade, right? Traders who had bought into the stocks ahead of the earnings quickly exited post the reports. And the recent macro data, the Fed testimony, the move in treasuries, the consumer sentiment all point to a bit of concern. Thus, I think the pullback, right? I can only hope that this time, though, the market actually pulls back, right? That it actually pulls back rather than just back off 1% before everyone goes running in. And what's that typical FOMO trade, right? That fear of missing out. What we need is a real correction, a 5 to 7 or 8% correction to really shake the trees. The market needs to shake it a bit, right? We need to see who falls out of the trees and to what extent they fall. Are they falling from the lower branches or are they falling from the higher branches? Now, the lower branches are suggesting the more trader types, right? The short-term guys. The higher branches are suggesting the longer-term asset manager. And that story, and that is going to tell a very different story, right? Because it reflects a change in mindset if the longer-term asset manager really begins to fall out of the trees. So you got to pay attention to who's selling, at what rate are they selling, what's the panic, what's the anxiety level in the market. Right now, it's not so much, so don't get so nervous. Eco data today includes nothing that's going to be a directional driver at all. But later in the week, we're going to get housing starts, building permits, Chicago Fed survey, existing home sales, Kansas City Fed survey, and manufacturing and services PMI. So there's going to be plenty to chew on in addition to earnings. And when we speak of earnings, we're now in the middle of it, right? And this week, it's going to be a big week. Look for reports from IBM, Coca-Cola, Chipotle, American Express, Netflix, UNP, UAL, Telephone, Verizon, and Honeywell. All names are going to provide guidance across a range of industries. So pay attention and remember, the earnings are history, right? The earnings are history. It's all about the guidance, and that's what matters. And expect to hear more, certainly about the Delta variant, as this is sure to cause some volatility in the days ahead. In any event, the rotation between growth and value continues. So there's no reason to change your whole portfolio at all. Stick to the plan and focus on the goal and not on the short-term noise. Right, that's kind of a theme that you have to get used to. You just have to have a strong stomach for it, right? Bitcoin continues to weaken. It's now down another 1%, trading at 31,300, teasing 30,000. Ethereum's trading at 1850 and Dogecoin's trading at 16 cents. The S&P closed on Friday at 43.27, down 0.75%. This morning suggests more weakness and the action out of Europe is not helping. Today's going to be all about earnings and more discussion over the state of the economy, inflation concerns, virus concerns, treasury concerns, and what the recent decline in yields really means for the market. Remember, when the tone is negative, all the stories tend to support the mood. And once that turns positive, then the stories suddenly turn as well, and all the negative goes out the window. Suddenly, all the concerns of today won't be there tomorrow if the market suddenly turns and somebody finds something positive in all this mess. Suddenly, they'll focus on all the positives. In any event, I remain cautious in the weeks ahead, and I've been saying this for a while, right? Due to earnings surprises and rising inflationary pressures, August, remember, will typically be a quiet month, and then we have the usual seasonal weakness in September and October. Breadth in the markets recently has continues to weaken as we approach these new highs, and that should be concerning from a broader perspective. And in fact, we're seeing some of that play out now. All this means is that expect volatility in the days ahead. It doesn't mean blow out your portfolio at all. As usual, I'm making my list. I continue to put new money to work, and I continue to tweak the money that's already invested just in case I go out of balance. But I'm really focusing on, you know me, I'm focusing on the value side of the trade right now just because I am a little bit concerned. And I've taken up a hedge position, so that's going to protect me both ways. Remember, you can text the word INVEST to 21,000 to get my digital business card. Give me a call if you want to discuss the markets or a plan. You can also follow me on Twitter. My Twitter name is just my name, @Kenny Polcari. My Twitter handle is just my name, @Kenny Polcari. And I'm fairly active on Twitter, as you see. In any event, what are we having for dinner? So we're going to make this risotto dish. It's broccoli and fava beans, right? It's a great summer risotto. Now, risotto you can make, all around, and depending on what's in season, kind of dictates and drives the kind of risotto you make. And this one is all about kind of summer, right? It's green, it's delicious, it's light, and it's good for you, right? And like I said, you could choose to make vegetable risottos a bunch of different ways depending on what time it is, right? What time of the year it is. In the summer, it might be this dish, right? You can always add zucchini, you can add mushrooms, but you can do that at other times of the year as well. Fall might be butternut squash and corn. Winter might be the winter beet. Spring might be spring pea risotto, right? You can always kind of mix it up with the seasons. But either way, we're going to make this one today, and it's just broccoli, fava beans, it's the rice, it's the chicken stock, the white wine, the Parmesan cheese, and the butter. So now you're going to take the broccoli florets, you're going to cut off the florets, and you're going to take the stems and you're going to slice them in half. You got fava beans, you got salt and pepper, you got olive oil, chopped onions, a chopped shallot, arborio rice, dry white wine, vegetable stock for this one, not chicken stock. You can use chicken stock if you don't have it, but you need about 7 cups of vegetable stock. You need butter, fresh grated Parmesan cheese. You want to steam the broccoli florets and the stems for about a minute. Then take the broccoli florets out and leave the stems in and cook them for another 4 or 5 minutes. You want them to be tender because you need to puree them. Once you take them out, let them cool a little bit, put them in the blender, puree them. You can add a little bit of the broccoli water to that to make it smooth, right? Scrape out all the puree, put it in a bowl, take the broccoli florets, which you've kept whole, put those in a bowl, just leave those because we're going to use those later. In a big, heavy pot, you want to heat some olive oil and a dollop of butter, add the scallions and add the onions and the shallots, until they're translucent, maybe 5 minutes, right? Not scallions, onions you need until they're translucent. Now you're gonna add the rice, stir it in, coat it with oil, keep turning it over the heat, just till it becomes translucent, maybe 4 or 5 minutes, right? Now you're gonna pour in about 3/4 of a cup of white wine. Remember, Pinot Grigio Santa Margherita is what I use, and let it evaporate away. Once that does, you want to stir the rice constantly until it evaporates away. Once that does, you want to start adding the ladle of the vegetable stock into the rice, right? So put a ladle, cover the rice, stir it up until it absorbs. Once it does, put another ladle in there, stir it up till it absorbs. The whole thing should take you 15 minutes or so to get 3/4 of it done. Now you're going to add the broccoli, the pureed broccoli. You're going to add the broccoli florets. You're going to add the fava beans to the rice. You're going to mix it up there. You're going to keep adding the rest of the stock until it's all absorbed. The whole thing from start to finish should take you no more than 30 minutes or 35 minutes. But you have to stand there over the stove, and you've got to constantly stir, right? You can't just leave it. Now you want to remove, once that's done, you want to remove the pot from the heat, taste the rice, and make sure it's completely, you don't want it to be crunchy. Now you want to add another dollop or 2 of butter and the grated Parmesan cheese. You want to stir it so that it's all mixed together. You'll see the heat from the rice will start to make the cheese melt. It'll become creamy, which is exactly what you want. and then serve this immediately in warm bowls. You can have this as an appetizer portion. You can have it as a side dish if you're making something else. You can have it just as dinner if you want. With nothing else. It's your choice. It's summertime, you do as you want, but certainly you could serve that at your dining table with this in the background. Always works well. A glass of white wine with this versus a glass of red wine. White wine or a rosé wine would work better with this. In any event, the day has just begun. It's sure to be great. Have a good day, and I'll see you in the morning.